Pro Medicus. And Pro Medicus, I'm not sure if you're familiar with the business. So it's a software imaging company, and they provide software for radiologists and hospitals to stream the images onto their devices of tests and graphical representation. So what Pro Medicus does, and if I go through each of those layers, if you think about the industry structure, so Pro Medicus is a SaaS business, software as a service, and they are predominantly in North America, so 75% of their revenues are there. If you think about the industry of healthcare, they're in the US. They've recently just gone onto the medical record, electronic medical record, which means we're at the start of an upgrade CapEx cycle, and we're moving from legacy systems to best in breed capabilities that can plug and play, and Pro Medicus fits into that. So for me, there's a very clear runway here for a business like that. If you look at radiology, which is the vertical that they're currently penetrating, it's the most ripe for, and it's been publicly documented, the most ripe for disruption with AI. So Pro Medicus have actually developed an AI algorithm to go into that place. So that's the industry. Then you look at the business strategy. So Pro Medicus' strategy has been over the last few years to go after that top tier research hospital that's tied to a university. And what that means, and these are multi-site hospitals, what that means is a lot of the upcoming radiologists are being trained on this product. And as they go out into the workforce, they'll be very familiar with it. So again, advocacy and word of mouth is really important. Talking to word of mouth, they have 3 sales reps globally. So you can see the benefit and the real value that these customers are having with the product, that you don't have a whole force of people out there doing the selling. Then if I look at the management team, so the management team, 50%, 3% of the business is still owned by the co-founders. One of the founders is the CEO, Sam Hubert. He is a doctor by trade, but also deeply passionate about this. Then we've got an incredible R&D team based over in Berlin that are very aligned to the success of the product. And then the next step down, you look at the financials. So what do the financials look like? So they've got 30 odd million of cash on balance sheet. When you look at the revenue structure, not only is 95% of revenue recurring, but they're guaranteed in a contract. So they've got minimum revenue guarantees. And then you've got very clear accounts with the business as well. And then the final pillar, I suppose, is ESG that we mentioned. And this is an area that they're not perfect in, and we've identified them as a priority engagement for us. The important part is that they're willing to improve. So if I think about data security, there's some easy wins that they can do there because they don't hold any of the data on their end users, and it's just a matter of publishing that. The other part is around governance structures, and so we're working closely with the company and I think that's going to be an easy win for them. If I can though, the one thing is that everyone thinks, well, that's all great, yes, it's a high quality business, but it's expensive. And that's the other piece of our investment process that we are very focused about, the valuation of businesses and what we're willing to pay for them. So if I look at Pro Medicus, and I think it's at $23, $24, $25 around that level. For me, what's priced in at these levels by the market is continued success in the radiology vertical, and that's 3 to 4 new contracts per annum around that $10 million mark, and continued penetration into that vertical. What is not priced in is their AI capability, and how they commercialise that is still unknown, so you don't really want to factor too much of that in. I don't think there's much in the price for other verticals, so they're looking at oncology and ophthalmology as well. I don't think that's been reflected. And also when you consider the execution and the repricing of contracts, many of these contracts are 7 to 8 years, and many are coming off, and every single one, there's only been a few, have been recontracted at significantly higher prices. Again, I question whether that's priced in.